So thanks a lot for having me here. It's great. And super exciting to actually be here also for the morning. Great discussions and great knowledge that we managed to share. So let me introduce myself. I'm Giulio Romanelli. I'm a partner in McKinsey based in Sydney. Both from my name and my accent, you can totally tell that I'm clearly not Australian. Italian, and then lived around the world and then landed to Sydney. I lead the global transaction banking practice for McKinsey in Asia. And as a consequence, I basically work at the intersection between corporate banking and technology. I'm passionate about blockchain since the beginning, also on the personal front. And today, what I want to discuss with you is to share really some of the insights of McKinsey research on blockchain across multiple industries. But at the same time, I'm conscious that this is the first session after lunch, so stakes are high. And so I wanted to start with a little bit of an icebreaker. So with this vignette. I'll give you 1 minute. Great. I see a few people smiling, a few laughs. That's great. And at the same time, I must say that this is actually very true. This is the situation that represents the majority of organizations today. And this actually tells me two things. Number one, there is a significant need for quite a bit of education. And number two, there is definitely some need for strategic focus. And my idea is today to try to get to these outcomes speaking about three things. Number one, to try to demystify some of the hype about blockchain with some facts and some misconceptions. Number two is to really share the insights of our research about what is the strategic value of blockchain. And three, to actually put on the table some of the key questions that I believe any of us should actually ask ourselves if we want to find a truly distinctive value proposition of blockchain. But let's get started. So some facts about blockchain. Clearly, blockchain is gaining a lot of momentum. And why is this? Just want to share a couple of stats that I find extremely interesting. Number one, the World Economic Forum survey said that they expect 10% of the global GDP to be on blockchain by 2027. It's only 7 years away. And the second one, if I look at last year, the number of blockchain developer jobs on postings on LinkedIn grew by a factor of 33. So honestly, it could be a good second career for me as well. And why is this? Why this great momentum? Honestly, because if we look at the blockchain technology and the DLT, there is definitely some distinctive value within the platform, within the technology. And we heard these elements multiple times also this morning. So I'm not going to spend a lot of time, but basically it's about the fact that it's decentralized, that it's secure, that there is process integrity, and there redundancy. But at the same time, there are also a lot of misconceptions about blockchain, a lot of myths, and I want to debunk them. Number one, blockchain is not Bitcoin. Number two, blockchain is not always better than traditional databases. And finally, and super important, blockchain is not 100% secure. And I mean it in the sense that it's not tamper-proof, that it can be hacked. Multiple examples. We also heard about this morning. And finally, it's not a truth machine. In a sense, garbage in, garbage out. At the same time, we all know these facts, and the fact that these things are misconceptions. But at the same time, these misconceptions sometimes are very sticky, very difficult to remove. Because honestly, if we look at the Google searches, and we believe in this KPI, the number of Google searches on Bitcoin and blockchain, there is definitely a strong correlation. And honestly, if I step back and look at this graph, I might very well be saying, after the peak in the market cap of cryptos in January 2018, and after the fall of Bitcoins, there is not so much interest anymore on blockchain. But actually, this is not true, and this is what I find exciting about blockchain. Because if I think especially in the last year, what I've seen is that I see a lot of industries really focusing at the core of blockchain to understand what is the value behind blockchain. And in a sense, across industries with different kind of advancement, more or less everyone has jumped on the bandwagon, as I would call it, on the blockchain hype, in which more or less everyone across industries is experimenting one way or another on what is the value for that industry on blockchain. Some of them are already quite mature, I would say, and we heard a great discussion also this morning from the panel about use cases that are already there. There are others that we're just starting to see experimentations, but in terms of the business value behind that, are pretty exciting. And let me share, from the work that I do, one stat about really some facts about blockchain that I find quite interesting. If I think about, the fintech space within the financial ecosystem, 12%, a little bit more than 12% of the VC investments on fintechs are related to blockchain, which is actually quite interesting if you think that cyber is also 12%. And second thing which is very interesting is that the fact that probably the first reaction to blockchain, you would probably tell me disintermediation. But actually, as you can see, the investments are focused more on the process improvement. And you will see that in a second. This is very consistent also with our research. But enough about facts. And let's say that now we're convinced that there is value about blockchain. So now the question is, where is this value? And so what I want to tell you is some results of the research that we did on blockchain across 14 industries, across more than 100 use cases that we already see in the market. And I really think that there are 3 key takeaways. Number one, blockchain has definitely a disruptive potential across 6 macro areas of use cases. And I will tell you more in a second. Number 2, in the short term, even if everyone probably speaks about the disruptive potential, it's not so much about revenues, but it's about cost reduction. And the third one is feasibility at scale is still not today. At best, for the industries which are the most mature, is still 2 to 3 years away. Let's have a look more closely to each one of these. Number 1, there are 6 archetypes of potential value that we can extract from blockchain. Number 1, from static registry. Number 2, a deep dive on that on identity. Already see some examples in some European countries about voting enabled by blockchain or digital identity. Very interesting. Number 3, smart contracts. Super exciting in terms of what are the implications within the legal framework of that. We're going to discuss later on about insurance. And from a more dynamic perspective, dynamic registry. We discussed a lot about implications on trade. I would want to add syndicated loans and something quite exciting at the moment on blockchain. Payments infrastructure, not necessarily through cryptos, but really thinking about DLT as another way to support the payment infrastructure. And then finally, as a technology by itself, which you'll absolutely recognize if you think that from AWS to Google, they're all offering now a sort of blockchain as a service product. And if I think about these 6, and what we did, we really scanned multiple use cases with the lens of which of these are winning and when and why. This is more or less stepping back the picture that we see. So definitely there is value in blockchain. And as you can see, the most value is actually in cost reduction. And more or less, I can tell you 70% of the value is from cost reduction, simply because as we were discussing this morning, the intermediaries will be removed. And more or less, let's say 25% is on revenues. And there is a significant potential, even if it looks mild, of a 5% associated to capital optimization. And of course, the question might be, what is the most mature? No surprises here. I would say that financial services, the public sector, and healthcare at the moment are the most promising in terms of maturity of the underlying technology and the trade-offs that we're already seeing in the industry. So this is the good news. The bad news, my point number 3, is that feasibility is actually still not today. And especially if we look at feasibility at scale, it's still quite low. And the message that I want to pass is that how to look at feasibility. Because typically, when I also speak about blockchain or I have discussions with my clients about blockchain, I hear a lot of bias towards technology or about regulations. Definitely super important, and we discussed about these two a lot also this morning. I would want to add a third one, which is the capability of shaping an ecosystem. And this is something that is absolutely super important, especially if we want to focus on public blockchain-enabled use cases. Then finally, last but not least, is the quality of the asset. Where I want to use one example to really share with you why I believe the quality of the asset is super important to basically understand whether an industry or a use case is feasible now versus not. And the use case that I want to use is music. Let's think about the journey that music went through. So more or less 100 years ago, if we wanted to listen to music, we had to go for the violin. Then we managed to introduce, the vinyl records, so a sort of analogic, repeatable version of music. Then we moved to CD-ROMs, so basically what I would call a digitized version of music. And only more recently, we went through MP3s, so a digital native version of music. And why I'm saying this, because this is actually quite important if I think about blockchain-enabled use cases. Because I will be able to extract real value from blockchain if the asset really goes throughout this cycle. And why is that? Because if I think about music now, for instance, there are use cases of blockchain-enabled royalties, settlement. And I can do that through smart contracts because, the asset, so the music, is digitally available and digitally native. And so why I think this is quite interesting, because in the future, we see that the asset digitization will be very important to really capture value from blockchain. And it will also imply a lot of thinking in terms of what are the trade-offs and the interplay between DLT and IoT, if I think about logistics and so on. So that's it. So clearly there is value. Clearly, there are some pockets of value, and cost is probably the first source of value. But still, we have some challenges to really capture this value. And so now, I want to share with you a couple of, actually 3 key questions that I believe are super important to understand how to create a distinctive value proposition about blockchain. And it's really a set of 3 dichotomies, I would say. Number 1 is private versus public. Number 2 should be business-backed versus technology-forward. And number 3, should I have crisp focus on an industry, or should I try to go for spillover across ecosystem? Let's go one by one. Private versus public. This is it might seem as a technical problem, but it's actually definitely not a technical problem. Everyone probably is biased towards the concept of Bitcoin, which is a public and permissionless kind of blockchain-enabled ecosystem. However, it's very complex in terms of the trade-offs that I can make on my ecosystem. Vice versa, what we're seeing, which is pretty interesting, and we can expect these to simply grow in the future, is the fact that the commercial most viable use cases will be based on private and permissioned blockchains. And why is that? If we think about it, it's actually straightforward, because it's actually related to 2 key factors. Number 1, third parties, so the third parties of today, if they start innovating now, they can still be relevant in the future. And so this is why, for instance, it's very interesting to see banks moving ahead, to really become DLT enabled also in the future. Another example, from my home country now, from Australia, ASX, offering also a DLT enabled way to do equity settlement. They want to remain very relevant, and it's very important. The second one is also the fact that a private permission blockchain versus a public permissionless actually offers great opportunities of pushing a lot on the trade-offs in terms of between technology and value that I want to extract. Because for instance, I might decide to not go with a blockchain, just with the DLT, with my own rules and my own governance. And this is already happening. It's already happening a lot, especially within the logistics sector. This is one. So it's very important to pick where you want to play. Second one is business-backed versus technology-forward. Honestly, the vast majority of the conversations that I had was this is a great idea, I want to put it on a blockchain. So it was very technology-forward. There is this great technology, I want to basically ride the hype, and so I think that by putting something on the blockchain, I will be able to extract value. As the maturity and the level of education on blockchain grows across industries, this is becoming totally different, and rightly so. Because actually, and I heard this multiple times this morning as well, we should always start from what are the real pain points for the customer. As a consequence, what are the business use cases that make sense from a business perspective? And only at that point, decide how to compete on that use case, and then what are the technology trade-offs that make sense. So going forward, it's going to be more and more business-backed versus technology-forward. Because I believe that if an organization cracks the right use case that will be enabled by DLT, then the trade-offs required to make it scalable and to make it performance will be possible. The other way around simply is impossible to get there. And at the same time, another advantage of going business first is the fact that you can pick where you want to play, which is depending on the industry and depending on the market dominance in the industry and the level of regulation, it's not straightforward to decide what is going to be your strategy. In some cases, you want to wait and see, the follower approach, especially if regulations barriers are super high and you're one of many. On the other opposite end, if there is low standards and you're definitely the first on the market, you should go big. And this is honestly, for instance, once again, what ASX is trying to do now. They are the third party, they are the incumbent, and so they're trying to actively shape what is going to be the market in terms of DLT-enabled equity settlement. So once again, to recap, I said private versus public. I see more and more going towards private. 2 is business-backed versus technology-forward. It's going to be business-backed to be successful. And 3, which is something that more and more I see, is should I focus on one industry or should I try to capture the, you see the image, the spillover effect? I do not have the answer yet, but I think this is a fantastic question, to ask ourselves for each of the use cases. Because for instance, should we try to really capture the value of a blockchain-enabled trade finance, or should we use DLT to enable across, the ecosystem of logistics and import-export? Because at the end of the day, trade finance is an existing way to solve a problem of logistics. Number 2 is something that I'm seeing more and more, is should we simply focus on blockchain-enabled P2P lending, or try to use DLT to really change the way, for instance, the property or the real estate world operates through tokenization and fractional ownership? And so I'm basically putting this question on the table because, as I said, there is no clear answer yet, but I'm seeing a few players going in each direction. And I think it's very interesting because it will depend a lot on the industry and also on the strategic focus of these players. And this, at the end of the day, will imply if they're going to be successful or not. Thanks a lot. I think we have 5 minutes for questions, and I would be super happy to actually open for Q&A.
So there's a couple of questions here. The first question is, well, on Slido, there's talk of potential, but it's been 10 years since Bitcoin and we're still not feasible. What will it take to be feasible?
It's an excellent question. And I think this is probably the most important skepticism, as you read before. In my opinion, the only one sane way to approach blockchain and DLT is to be pragmatic and skeptic. What it would take, the answer is very complex because it depends on the industry. But as I said, it really, what will matter is to find the right balance between the quality of the asset that I want to put on the blockchain. Two is the reg ecosystem, how the regulators will be happy to shape together the blockchain-enabled regulation ecosystem. Three is if I can actually capture a network effect or not. And I think honestly, these three matter much more with respect to the technology.
Okay, one more question also from Slido is, you mentioned capital markets and syndicated loans is a ripe case. What are you actually seeing in this area that makes you think so?
Yeah, excellent. Thanks a lot for this question. I think it's a mix of two things. Capital markets, as I was saying before, is probably one of the most mature areas also in the financial sector. And why is that? For a mix of two reasons, in my opinion. Number one, simply because they started sooner with respect to other industries. And number two, because the quality of the assets at the moment are, is great for blockchain-enabled use cases because they are easy to be digitized, or they're already digital, just like equities and so on. Syndicated loans is probably where we're trying to push the boundaries towards more complex assets and towards use cases that at the moment simply are incredibly inefficient within the financial services world. And so actually having an answer enabled by DLT would be very interesting. At the same time, to be honest on this question, syndicated loans is probably one example in which I definitely see a potential interest within the industry to focus on DLT-enabled solutions. But at the same time, we should all recognize that the industry, so the financial sector, is also not deciding not to go for blockchain or DLT on other examples. So just like the trade, network that was recently launched by, a few banks globally for PO discounting, at the end of the day, they decided not to base it on DLT. Why is that? Because it's always a trade-off between what is the value that I can extract, what are the trade-offs from a technology perspective, and what is the cost of the technology itself.
Last question from Slido. Could you please explain the difference between permissioned and private?
Absolutely. At the end of the day, let me go back, and I'll try. No worries. It's actually easy. There are two different dimensions because private versus public is whether I, as a private individual, own the network of blockchain versus I really simply create a technology that can be used and spun up by everyone. So this is really about the ownership of the network. The permission versus permissionless is even if I'm a private and I own the network, I could grant access to everyone. So everyone could be able to join that. In a sense, is the idea of some of the first ICOs, right? On the other end, vice versa, I could be private and I could decide to restrict the access to my blockchain-enabled network only to some parties that, for instance, meet my bar in terms of KYC. And this is as well something that we're seeing quite a bit.